Good evening, everyone. Sterling here with the Daily Market Review for October 14th, 2013. We are looking at a chart of the pound. And, today we had a couple nice setups. So first we'll, like normal, walk through the previous day's setups based off of the manipulation points that we were looking for in yesterday's review. And then we'll kind of get into what is expected today. Not a big change in the sense that there's been a big cycle change today because of the fact that although we had movement in the market today, we ultimately ended up in roughly the same spot. If you look at where the market is at right before the start of the European session, there hasn't been a great deal of change here in the pound, and you flip over to the euro, and the euro is again pretty much in the exact same position it was compared to the start time of the European session for yesterday. So as far as the market today, there was a lot of motion, not a lot getting done. We saw a couple nice stop runs and good moves off of the manipulation, but overall that move eventually ended up coming back after moving 40, 50 pips one way to the other. Ended up coming back the other way, possibly creating a stop run back the other way. And so there wasn't a whole lot of activity in the sense that a whole lot of activity to drive the market for an extended period of time in one direction or the other. So flipping back to the pound, we'll start with the pound here, because the pound had a really nice setup at the first manipulation point. It was a beautiful set of reversal legs. The only thing I didn't like with this trade here, and not a trade that I was personally looking at, but the only thing I didn't like about it from the perspective of any setup really, is the fact that you didn't have much pullback from the open of that candle. Now, it was in the target area. As you can see, I'm measuring back here, and it's about 13, 14 pips away from the lows. So it was technically in the target area as soon as the confirming candle closed up here. So as soon as this candle closed, technically the entry could have been taken. And I know some of you were taking the entry there, but there's also quite a few, and I don't blame you. You're looking for a little bit deeper pullback, never saw it, and the market ran off. One of the nice things here is that it did give you ample opportunity. It moved around for 15 minutes, and gave plenty of opportunity to take an entry if somebody decided to. So nice setup. What I liked about both the pound and the euro with these setups is that there was a nice correlation between the two. This candle right here is the 12:15 candle. We'll flip over to the euro, and right here is the 11:45 candle. So if you look at these setups were very close to each other in the sense that this euro was setting up. The euro confirmed up here with the 12 o'clock candle, and the pullback candle here was the 12:15 candle. So you had a stop run of your overall low, your similar level on the euro at 11:45. It confirms up at 12. 15 minutes later, which is your 12:15 candle here, you see another setup. And so when it refers to the pound, if you're looking at the pound, like I said, the nice thing about the pound was that you had the euro agreeing with that setup. Now, for those of you that were taking the euro I think was just as good of a setup. Maybe at the time of taking the euro you didn't have as much information as the pound, but the offset with the euro was the fact that you had a much deeper pullback in relation to the overall lows, and personally, looking at one or the other, I would prefer the euro over the pound because of the depth of the pullback, in the sense that you got within, let's measure this exactly, you got within about 6 pips of the lows. So the risk there was pretty low in the sense that if that level is going to hold, your stop run was going to cover that by a great deal. So solid stop run, nice confirmation up here. Third candle offers the pullback, and the trade runs off nicely from there. This trade, depending on the depth of the pullback, ended up coming up, and I'm measuring from about the halfway point, so I'm measuring, as an average entry, came up, hit about 45 pips. So more than likely would have hit a take profit by 2 or 3 pips. Going into the New York session, what's nice about this is you didn't have much of a pullback. So moving the stop break even at New York wouldn't have got stopped out, and the same thing is true with the pound. Never pulled back at the start of the New York session, just continued up. And with the pound, this thing ultimately ended up hitting right around 50 pips from, if you took it, taking it from the close of the confirming candle, ended up coming up around the 48, 49 pip mark. So both trades getting to that 2-to-1 take profit. Nice trade overall off of those lows. Glad to see you guys doing well off those trades. And this is a good example of patience. There hasn't been a great deal of trades lately because of one thing or the other. Maybe it's a market that is stagnant in anticipation of news. Maybe it's a market that is running heavily based off of some tape bomb that comes out. So there's been one reason or another to be patient, maybe sit on the sidelines, and a good example of waiting for a quality clean setup is what we saw here today. Now, the pound offered one more opportunity, and this was as far as the pound is concerned, this was for us New York traders the best opportunity that we had here today, and it was a really nice trade off of a level that wasn't something we were looking for in the review, but it was a fresh level that was created during the beginning part of the New York session. Now, it was a decent point in the sense that you had some time and price separation, but what I liked about it was the clarity of the confirmation. You had a level that, again, this 1.6000 level was taken out. The market opened and closed above it twice, and that's why that level would have been thrown out there. But what we had is we had a market come up, set a fresh high, and then pull back off of that high. And so then ultimately, later the market comes up, takes out that high, provides a nice solid confirmation down, and that was one of the nice things about that trade was the strength of that confirmation. Now, this trade, much like the trade earlier in the pound, didn't offer a great deal of pullback, but you were within 10 pips of the highs, and so like I was mentioning earlier, that was one of the positives with this trade, is that you were already within the target area and well within the target area. In fact, it got within about 8 pips of the high. Measure that exactly. About 9 pips of the high. And so it was pretty close to the overall high. You gotta think when you look at the third candle, which is our pullback candle, what is the purpose of that candle? Well, the entire purpose of that candle is to get us within our target area of 15 pips, meaning if we want to take a trade long, we want to get in within 15 pips of the low, and if we want to take a trade short, we want to get in within 15 pips of the stop run high. That allows us to use a 20 pip stop. So if at the time the confirmation candle closes, you're already, let's say in this case 10 pips away from the high, well, then you're already well within the target area. You're already 5 pips better than what would be an acceptable entry. And so that's one of the questions that I'll get reoccurring when we don't have a pullback is, do I have to wait for a pullback when we're already in the target area? And the same answer I always give is, the purpose of the pullback has been fulfilled if you're within the target area, and therefore there's no need to wait for that third candle to pull back. You're already in the target area, no need to pull back or wait for the pullback for that entry. Now, the close to this trade would obviously have been the 5 p.m. close. This thing didn't run off. Didn't run off and give us the 40 pips initially. At best, you were looking somewhere around 25, 26 pips for a trade, depending on your entry or depending on the exact time of the exit as well. Okay, a couple good trades there, and let's move on to today and overall cycle. As I mentioned at the onset, I don't think a whole great deal has really changed. I mean, you could start to maybe make out a possible upcycle there with the pound. You flip over to the euro and out to the hourly chart, and you have the trouble with the pound is you have very lackluster moves. Here you have a 55 pip move. The following day, what do you have? Well, you have another 58, 59 pip move. The following day, what do you have? Well, you have another 53, 54 pip move. So overall, we have 2 days of upward price action. 3 individual cycles that are 60 pips, but nothing is really clearly satisfying a criteria for me. You could start to kind of make a case to decipher the up cycle, but at this point I just don't feel like it has enough strength to call it a clear up cycle at this point. And so that's why with the pound and the euro both, I'm going to continue to trade both pairs like we're in level 3 accumulation and trade the manipulation points to both sides of the price. Remember that when we look at cycle, every single day what I'm going to do when I look at the charts is I'm going to ask myself 3 questions. I'm going to say up cycle, down cycle, level 3 accumulation. Okay, so immediately what I'm going to rule out the easiest things first. So I'm going to say, okay, well, am I in a down cycle? Obvious answer to that is no. We've seen 2 days of slightly upward trending price action, so you're obviously not in a down cycle. Are you in a level 3 accumulation? Well, in the classical term of level 3 accumulation, that means we finished a cycle and now we're in the accumulation that occurs at the end of that cycle. You know, not really, because the previous cycle before this wasn't clear either. And so what we're left with is an upcycle. And so, okay, well, you could say, okay, well, that's really the only key option. So we're in an upcycle. So now we're going to narrow it down even further. If we're in an upcycle, then what cycle are we in? And that's where the problem comes in. You can kind of differentiate cycles, but at the end of the day, you're running short cycles, you're lacking conviction, and as I always say, if you hesitate as to where you're at in the cycle or possible direction in cycle, there's absolutely nothing wrong with trading the market like you're in level 3 accumulation, which very simply means you're going to look at the manipulation points to both sides of the price and allow the market more time to either clarify a cycle or, you know, allow what is currently going on to finish up. Because just like yesterday showed, we don't necessarily have to have cycle direction in order to get some quality trades. What we need to see is decent manipulation points and then see the manipulation in and around those levels. Cycle is a big help when it is clear. When it is not, there's nothing wrong with trading the market like we're in level 3 accumulation and thus trading the manipulation points to both sides of the price. So we flip over to the pound. Again, the same thing with the pound. You know, with the pound here, I think it's closer to saying you have a cycle because you have an 84 pip move up here, and if you measure from the depth over here, it's about 95 pips. But separating those moves by a day, here's one full day, and then, whoops, measure this out the next way. So here's the next full day, and that move is only 60 pips. So, you know, if you come down here, it's possible that, okay, that we have a first push and a second push, and we're starting a third. It's definitely possible, and that could be the way it works out. But at this point, what is going to allow us to catch both directions, and what's going to allow us to even catch the move up? Well, what's going to allow us to do that is look at the manipulation points to both sides of the price, and I feel like there's enough question in the market to where that's going to be the best option. So I'm not going to hesitate to do that. I'm going to simply look at the manipulation points on both sides and let cycle clarify itself as we go. So what are the points we'll be looking for? Well, we'll zoom out here. Couple points to the upside change. Number one, our first upper point is going to change. We're going to move this level to 15. This is the fresh high that we set out of the Asian session, or out of the New York session here today, and so that's why we're going to move that level up a bit. What I also like is our lower level is going to come down just a touch. Our lower level is going to come down to 58, and that's just going to coincide with the fresh low that we had set. Pull it back to the candle body, and going to lower that point down just a few pips. So if we look at a little bit closer level here, and this is the one wild card at this point. At this point, this is not a established high as of yet. You know, if the market works off of this level, then that becomes the last short-term high, and in that case, I would look to use it as a potential manipulation point. This level also coincides roughly with the psychological barrier of 1.6000. So depending on what the market does is going to dictate whether that would be a viable level or not. So if you don't understand what I mean by needing to see the market pull off at that point, then simply, very simply don't use it. But the bottom line is this high is not a high until the market establishes itself as a high. In other words, it has to pull off of that point in order to, again, establish itself as a high. So we'll need to see that happen, and that will be kind of a possibility depending on how things go. Now, above that, I'm going to continue to leave in that upper level of 60.30. That point is going to stay in, and also the lower point here of 59.15 is going to stay in as well. Oops, get that back in place. And if we flip out here, 59.15 is the overall low. Actually, I might zoom in a little bit clearer. 59.15 is the overall low from the hourly, and that's going to be the lower point that I look to use as essentially our base. Once we break below that, really, as far as a potential point I'd be looking for is, if that level is going, I'd be letting the market work itself out, run the rest of the day, work off at any level the following day. So in other words, should that level go, more than likely I'd just be letting it go at that point. The only option that you could have is a potential backside of the level trade off of that. But beyond that, your manipulation points are so far back that it's much harder to trust them as a valid point, and thus why I just want to stick with the overall low as the last point, at least right now today, moving into today's price action. So to the downside, 59.57, 59.15, and possible to the upside is one spot 59.97. Again, that's possible, but for sure the two levels that will work from are going to be one spot 60.15 and one spot 60.30. Going over to the euro. Looking at the euro, we don't have a great deal that really changed because we just came into some upper points. We had a very clear high that was established during the New York session at 93, but the issue here is that you have two levels within 10 pips of each other. Now, generally, when I have two levels that are within 10 pips of each other, what do? Well, I simply remove the first point, use the deeper point. The only exception to that is when those 2 points are both clear overall swing points. And so if we look at the hourly chart here, you can see that both of these now are solid swing points. Now it's much more it's much cleaner on the 15-minute, and both these lines represent the 15-minute candle body high, but the bottom line is that they were both clear swing points, and so that's why I'm going to leave both those points in, even though they're within 7 pips of each other. So if you have two mediocre points and they're within 10 pips of each other, I'm always going to remove the first point and just simply use the deeper point. When these points are both solid overall key levels that the market has responded to and responded to cleanly in the past, then I will look to use both of those levels if they're both, again, key major swing points in the market in the past. Okay, now one of the levels that didn't have a great deal of response early on, but then ultimately came back into it and tested it on both sides, was the 35.75 level. So I'm going to look to leave that level in there, and I'm going to leave that level in because of the fact the market did respond to it. I'm also going to leave in one spot 35.51 to the downside and one spot 35.28 to the downside. And the reason we're going to look to leave that level in there is because of the fact that as far as the 35.51 level, that is, because of the fact that we've again held on that on the way to the downside, and our lower levels again have not changed, and so thus why we're going to continue to leave the same lower levels from yesterday that we used in the euro. Going to continue to use the same points here moving into today until the market either disproves or proves those levels and we get a valid opportunity off of them. So not a great deal of change. We only had a push up and then it came right back into that range. So not a great deal of change, which makes our job relatively simple as we wait for further clarification on the cycle. Alright guys, that's going to do it for the review. I will see everybody in the room tomorrow, bright and early, 9 o'clock. Look forward to seeing you guys there. As always, if you have any questions, feel free and shoot with them there or shoot us an email. We will get back with you. Until next time, happy trading.